Good afternoon. My name is Martin Straka. I've been in the mortgage business since 1990, and a lot of the questions that you may be thinking about when buying a home are the same questions that my clients have asked me. I'm sitting here with a friend of mine, and we've decided to record a few videos to see if we can provide you information that will help you along with your decisions.
When I'm working with buyers, one of the first things they say is, well, since prices are going down on houses, maybe I should just wait to get a house.
Well, that's a tricky one. The important thing to recognize is that you're never going to know when you've hit the bottom of a market until after you've been there. Right now in today's market, there's a tremendous amount of homes for you to be able to select from, and there's opportunities to get exceptionally good values. At the same time, take into consideration that right now we're looking at record low interest rates.
Well, for instance, how do interest rates play into whether I get a house or not?
Well, if interest rates go up, then it can cut your buying power. As an example, if you were looking at buying a home in a $300,000 price range, every time that interest rates go up even 0.25%, it cuts your buying power by about $10,000. So if interest rates go up 0.5%, now your buying power has been cut $20,000. So let's say that you were looking at a home, you found a house that you liked, and they were asking $300,000, and you were thinking, you know what, I'm going to hold on just to see if I could possibly get this house for $290,000. And while you're waiting for the price of the house to drop to $290,000, which it may never do because the seller may not be willing to sell it for that price, all of a sudden the interest rates go up, and now that $300,000 house, you can't afford it at $290,000 because even if the price came down, your payment went up higher than you can afford. The important thing to realize is that in today's market, you're at record low interest rates. Your buying power has not been better in years, and the inventory that's out there is fantastic, and prices of homes are very, very fairly priced right now. Especially we're in New Jersey, our market's been pretty stable.
Well, how do I know that if I'm going to have to take 6 or 8 weeks to close on a house, is there any way to guarantee that I get a good interest rate if I get the house that I want?
Well, I will tell you right now that you've got, when you apply for a mortgage, you have got an option to what they call float the interest rate, where you're playing the market and you can lock it at some time in the future, or you can lock in your interest rate at the time that you apply for your mortgage. I encourage every one of my clients, and I say every one of them the same thing, it's not my money I'm playing with. This is your mortgage payment that you're going to make. If you're comfortable with the mortgage payment at today's interest rate, lock in that interest rate. You don't want to take a chance, because if rates go up 1/8 or 1/4, and when rates rise, they tend to rise quickly in an overreactive situation. But rates come down very, very slowly, and since we're already at record low interest rates, they're going to come down even slower if they come down.
What are some of the costs associated then if I decide to lock in a rate rather than let it float?
Well, there's no out-of-pocket cost. When you're dealing with a mortgage banker, they don't charge you anything to lock in your interest rate. You're just agreeing to be set to a specific set of terms. And if rates go up, then you're not going to have to pay that higher rate. You're going to get the rate that you originally locked at. Now, at the same time, if you've locked in the interest rates and the rates drop 1/8%, the lender's probably not going to be able to do much to be able to help you get that last 1/8% or that last drop out of that stone. But if interest rates do drop a lot, let's say that something happens and interest rates drop by 1/4% or 0.5% or more, most lenders will have some sort of a policy in place for renegotiating that rate. Please understand that when you lock in your interest rate, there's a financial cost to the lender. They've had to reserve that money to make it available to you under a guaranteed term. So if you decide to renegotiate the rate, the lender does have some costs that they have to deal with. But I would always encourage all clients, lock your interest rate in at the time of application. Don't play the market. You will lose far more often than you're going to win.
That sounds like good advice. Where can I get more information about mortgages?
Well, you can contact me. My name is Martin Straka. My telephone number is 973-598-5006. You're welcome to call me just about any time, and I'll be happy to answer any questions that you have under no obligation. Just here to provide the information for you. 973-598-5006.